What is going on, traders? We got a lot to talk about. This is going to be a pretty long video. We're going to go over the SPY, triple Qs, what institutions are doing, and are we looking at a possible reversal heading into this upcoming trading week? Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So in my last video, I kind of implied, it was a short video. I had to make it short. I'm sorry about that. But I kind of implied that we could see some type of reversal or a bounce towards the end of this upcoming trading week. And I'm kind of sticking by that. If we look at the weekly time frame on the SPY, we do see a reversal hammer pattern here. Now, keep in mind this is the weekly time frame, so you have, a whole week for this to play out, if not, 2-3 weeks, right? So this doesn't have to play out right away. And what I mean by that is what I said in the last video, right? We go back to the daily time frame. We have still closed below 564. And what I was trying to get at here is that we had good CPI data, we had good PPI data. Bulls have failed to take advantage of that good news and break us above those key levels, specifically 564, right here where these guys are. So if we keep getting good news and bulls continue to fail to break above these key levels, I would just be cautious, right? I wouldn't get too excited for upside. So I'm still standing by that. And I do think it is possible that we see one more drop before we bounce towards the upside. Now, I'm perfectly fine with being wrong about that. I mean, I'm not going to be right every single video, right? At least that's the realistic mindset I expect everyone to have here. But when we're looking at the weekly time frame, we can easily do something like this. Maybe we just start off Monday, we see a drop, and then we hit 550. That seems to be the area where we're constantly bouncing off of. Between 550 555, we constantly bounce from that range, and then we see a move towards the upside. Maybe FOMC meeting causes it, maybe some other news causes it, Trump, whoever, causes us to bounce towards the upside. So I do think a bounce is very, very near when it comes to the upcoming trading week or the next 2 trading weeks. So something to think about here. Now, I could be wrong and we could just, immediately bounce on Monday. That's very much possible. Maybe we get good news. We do have news coming up on Monday. Maybe we gap up and break above 564. And then, at that point, I would start leaning more bullish, at least for the short term. But ultimately, I do think we're going to see one more massive drop in the market, right? So I don't want you guys to think I'm changing my sentiments. Now, when it comes to gapping up, let's say we do gap up, we're still below the 200 MA. I think everyone is forgetting about that, right? The 200 MA is around 571. Your key level is around 574, 573, give or take, right here where these guys are. So regardless, if we do see, some upside this upcoming trading week, upside could be very limited. And keyword is could be very limited, where we see a bounce towards 572, 573 range, right? And then we do it all over again. So it's important to be very cautious here. As long as we're below the 200 MA, you really have no choice but to be bearish, at least for the intermediate term, right? So it's important not to get too excited. It's important to not overtrade while we're below, or overtrade the upside while we're below the 200 MA, especially while we're below 564. Now, again, we do have a reversal pattern on the weekly time frame, and this is something I want you guys to pay attention to here, right? You have very tough resistance, and ironic enough, the resistance is at around 571. This is goes without saying, but just in case you can't see it, right here, so this will be your pretty much your supply and demand zone right here, right? So right here where these guys are, so you have to break back into this area right here, or break back above at least 575 psych level for us to see a continuation towards the upside. If you manage to break above 575, you pretty much enter the domain of these bulls right here and these bulls right here. Now there are bears right here, and I do imagine that they're going to continue to try to push the SPY further down, right? But ultimately, if you get within the range of these guys above 575, there is potential for more upside, and you're looking at a move where you open up the floodgates towards 584, 585. And then from there, it's really tough for me to see any more upside, but I mean, it's very much possible you see a move towards 590, 594 before, we do it all over again. So your key levels here is 564. I think that goes without saying. I've said this multiple times. You break above 564, you open up the floodgates towards 573, 575, give or take. You get above 575, then you open up the floodgates towards 584, 585. Right. And once again, if you are wondering how I'm getting my levels, you just simply zoom out. That's all I can say. Zoom out and you'll see them clear as day. Here, here, here. You'll see where the turbulence is, and then you just mark those levels out. So that's what I'm looking at when it comes to SPY in regards to upside. So let's talk about what institutions are doing, right? they're still loading puts. I don't want anyone to get it twisted. Now you're going to see this bullish spike right here, and sometimes people, I show people in the Discord what institutions are doing. They're like, well, what about that spike right there? I don't want you guys thinking like I'm so biased towards the downside that I, try to ignore bullish potential towards the upside, right? I don't want to be, I'm not that type of trader. I'm not a perma bear. I'm not a perma bull. I just trade what the market gives me. But if we do click on this spike right here, right? I mean, you just got a mixture of things, and a lot of these contracts are so dated that, to me personally, they don't matter, right? August 15th. I mean, we're so far away from that. September 19th. August 15th again. So, if these truly mattered, I would definitely click on it, right? I would definitely show Discord members or even you guys that, yeah, this could possibly be something, but they're so dated, guys. December 19th. I mean, what could I possibly do with this information, right? And then it's just a mixture of strikes, so it doesn't necessarily matter to me. Maybe it matters to you. Maybe you want to do leaps or something like that, but to me, this doesn't tell me anything for the short term. But when we click on, various spikes here, and hopefully you guys are noticing that the speed is much better on this new computer, right? It used to take forever for Quandata to load this stuff up. But when you click on these bearish spikes, and these happen 10 minutes after close, in case you don't know, you can trade the SPY and certain ETFs, depending on what broker you got, 15 minutes after close. May 16th, you got 530 puts. It's still pretty dated, right? 2 months out, 530 puts. You got a lot of 530 puts coming in for May, right? And then you got a lot of puts coming in for, what is it, April. So you got more puts coming in for May, and then there was another spike. I'm hoping I can find it. This is for June, right? That's a little too far out. Just bear with me here. But regardless, you're seeing a lot of these puts come in for between May and April. Now, originally, these were coming in for March 21st, which is next week. But it seems like institutions have changed the dates, or I guess, entered new dates for like May and April. And ironic enough, April is where the tariffs are supposed to be imposed, right, for these various countries. We kind of like put the tariffs off, or I guess acted like we're putting the tariffs off, because you know how our president just keeps switching up every chance he gets. But it's ironic that we're seeing these come in for April 17th and May, because that's when the new tariffs are supposed to come in. Let's actually do it manually, so you guys think I'm not making this stuff up, because it's kind of hard finding or remembering where those spikes are. So here, for example, we put in April 17th as the date, because that's typically the date that institutions are trading now. They went from, March 21st to April 17th, and you'll see, various puts for the 530s, right? And this happened, towards close or after close, like 10 minutes after close. And then you'll see, 550 puts. A lot of 550 puts are coming in for April 17th. So here, these were loaded up March 14th, this past Friday, 2:48 Eastern time. And then you got the SPY here, April 17th, 2025. You scroll over, you got 550 as your strike. And there's a lot of these, guys, a lot of these, right? Puts, they were loaded at 562, right? 562, right before that key level of 564. Now, this is where my issue lies, is the quantity is pretty low. But if we look at other orders, there's a lot more of these 550 strikes, right? And then, you got the premiums that are pretty low, 10K, 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 but if you add them all up, it adds up, right? So, I mean, even here, right? I'm pretty sure there's more. Yeah, you got more here. You got 560 puts, right? And it's not too far off from our current price. But you got 560 puts for the same date, April 17th. Loaded up at 562. Quantity is a lot higher for these, right? And it's very much possible that we see a move below 560, 560, right? And these were loaded up at 1. I think the SPY hit 560 between 1 and 4. Feel free to correct me if I'm wrong. I'm not gonna bother checking, but point being is that you're seeing a lot of these puts come in, and then this is where things get really crazy, right? You got 515 puts on the SPY loaded up. I don't know if the SPY is going to hit that low. I don't. Okay. And one thing I don't do is I don't blindly follow these guys. A lot of a lot of you in the comments, or I wouldn't say a lot of you, some of you in the comments, I feel like you wait on my videos to tell you what institutions are doing, and then you just blindly follow. I don't even blindly follow these guys. If I don't think 515 is possible for the SPY, at least for the short term, I'm not going to trade this, right? I'm not going to trade this. Like I told you guys, in that one video where I showed you guys, institutions are loading up 550 puts, that's a very much possible target. And the next day we saw the SPY drop all the way to about what, 548, something like that, 549, right? But 515 is just way too far out for me to want to predict or even see as a target, right? So I'm not going to trade something like this. If I don't see it happening for the short term, then I'm not going to trade it. Now, if we was like in the 530s, and I think 515 is very much possible, sure. But we're in the 560s. I'm not thinking about 515. I think that goes without saying. So I don't want you guys just blindly following without some type of confirmation. I look at the charts first. I don't look at what institutions are doing first. I look at what the charts tell me first. And if I see a setup on whatever stock, as long as it falls under the SPY and the NASDAQ, or whatever I'm trading at the time, then that's when I look at what institutions are doing when it comes to the SPY. Because if I'm trading, in Nvidia to the downside or Apple to the downside, I'm going to look at the SPY and see what institutions are doing when it comes to the SPY. And if they're still bearish on the SPY, then I'm going to take that play, right? So a good example on following a trade blind, right? Because I don't want you guys thinking that I don't take losses in the Discord. Like, we don't take losses in the Discord. It doesn't happen often, right? And that's not trying to toot my own horn, but you're going to take losses no matter who Discord you join, right? We took 155 puts for MSTR. I saw the institutions were loading up, and I let everybody know that, hey, this is a risky play, right? Very risky play. Risky play. I said it twice, right? 155 puts, expiration 21st of March. That's this upcoming trading week. We loaded up at 0.95, and then we took a loss at 0.55. It was a $40 loss per contract. But again, I let Discord members know that this is a risky trade, and this is when Bitcoin was below 84K. And I, let you guys know, as long as Bitcoin stays below 84K, the floodgates are open towards the low 70Ks. Bitcoin reclaimed 84K. Very much possible it sees more upside. Personally, I would like to see it above the psych level of 85K from here, right? But we do take losses, right? Now, are they common or happen often? No. I mean, here, you got to win here off SOXX. You got to win here off of SPY puts. You got to win here off Apple puts. You see the emojis. They're going crazy, right? So we win a lot, right? But you're going to take losses no matter. Nvidia, currently down on this, right? Taking profit on Apple puts. We took another win here on Apple. You guys know how I feel about Apple. We took profit here on Nvidia, I believe. Yeah, Nvidia puts here. I mean, the list goes on. So we do win a lot, but we take losses here and there, and that's fine. We took profit on MSTR puts, right? This was a different play, right? So I can keep going, but point being is that yes, we take losses, and institutions do take losses as well. Do they take losses the same way we do? No. Typically, when institutions are losing a trade, losing a trade, they either roll over their contracts, or they dollar cost average, or they simply hedge. So if they're losing on one trade, then chances are they're winning on a different trade, right? So it's really impossible to track all of that, right? But ultimately they don't really take losses, right? Or they don't take massive losses. And another thing I told Discord members is they don't set stop losses like we do, right? They're not looking at charts, right? They're not looking at charts like we do. That's what they got computer algorithms for, right? They don't look at charts and be like, oh, support and resistance is right here, and all that. They don't do all that. Okay, so I want you guys to understand that I don't believe in stop losses. I do, put out stop losses for Discord members, because I know there's a lot of members with small accounts in the group, and I don't want them to blow their account, or because typically traders with smaller accounts get very greedy, right? And then they'll take their anger out on the world when they blow their $200, $300 account. And there's nothing wrong with that. I personally don't think you should be trading with such a small account. But when I get traders with small accounts, I do put out stop losses for them more so than for me. I don't believe in stop losses. Institutions don't believe in stop losses, because I feel like you miss out on so much when you set stop losses. If I followed every stop loss I had, and as a trader, I would lose way more money than win. That's just me personally, right? So yeah, point being, I don't want you guys to follow this stuff blindly. Okay, that's my overall point here. So I kind of drag that, but regardless, institutions are still loading up puts for the SPY. I'm not seeing calls just yet. Okay, can that change? Sure, but trust me, guys, I I don't have my settings on only puts. I mean, as you guys can see, you're just seeing a bunch of huge bear spikes, and then the bullish spikes are very small. I mean, even when you click on the bullish spikes, you're still getting puts, So I just want to make that clear, that I'm not purposely looking for puts when it comes to what institutions are doing. And so we look at the triple Qs here, right? Like I said, this is going to be a long video. Okay, so we look at the triple Qs here, and again, you have this reversal hammer pattern as well. Now, here's my issue, right? Even if we see upside, right? Let's say we do see upside. which is very much possible. Um, I would imagine that if we're looking at the triple Qs, and this is the weekly time frame, by the way, that we hit about 499 tops before seeing another leg down, right? Okay. And the reason being is that right here, okay, right here, you have an evening star pattern. Okay. You have this massive evening star pattern on a weekly time frame. This is a very strong bearish pattern. This is probably one of my favorite patterns. This and a morning star pattern, they're very strong. I mean, you can see it right here. What happens when these things play out? They're very rare. Okay, you don't really see evening star patterns, especially on a weekly time frame. So it's going to be very hard to break above these guys here, right? Very hard. You may get a wick above 500, of course. I'm not saying, you just hit 500 and immediately reject, right? You may get a wick above 500, but ultimately, I think you're going to see some type of rejection from here. Now, will that lead to lower lows? I can't say for sure. It's too early to say, but I would definitely be careful at this 500 range if we do get a bounce when it comes to triple Qs. Now, let's say there is a world where we break above 500. Well, from there, you're looking at 503, and then you're in the territory of these guys right here, these bulls right here. So at that point, these bulls will probably start carrying the triple Qs higher, and then you're looking at a move towards 510. And then at that point, these guys right here would want to step in. Okay, so um, I really try my best to teach you guys how to read price action, especially pay attention to where bulls and bears are. Bears are extremely present in this area. I think that goes without saying. You have a huge evening star pattern, very strong bearish pattern, and then even here, you got a dark cloud cover as well. And so if you want to see a all-time high type of rally, you got to break through a lot. Okay, you got to break through a lot. You're going to need some amazing news. We do have FOMC minutes Wednesday, and then Jerome Powell speaks Wednesday, I believe. But I don't think that's going to be enough to send the market to all-time highs. That's just me personally. I don't think Trump is going to allow all-time highs just yet. We'll see. I can be wrong there, but yeah, when it comes to the triple Qs, you're still below key level of 480. Even if you get above 480, guys, I just want to make this clear. You still have to clear 485, 484, 485, give or take. And then from there, I mean, at that point, you're heading towards 492, and that's where pretty much the 200 MA is. But again, as long as we stay below the 200 MA, it's hard to talk about all-time highs, right? So if you're a trader or you hearing traders talk about all-time highs, I want you to remember you're below the 200 MA. There's no reason to be talking about all-time highs yet. Okay, can we get a rally? Sure. Can we get a dead cat bounce? Absolutely. But when we're talking about all-time highs, you're talking about breaking through a lot. Like you have so much to get past for us to start talking about all-time highs. So short term, it's okay to be bullish. I understand it's okay to talk about a dead cat bounce, but ultimately, I'm not looking at some this like I'm not looking at that right now. I don't think this is the environment to be looking at that right now. I could be wrong. As far as downside goes, I mean, as long as you stay below 480, I mean, you're looking at a move towards 470, back towards 470, 460. So again, if bulls want to step in, they would have broke us above these key levels. We have news Monday. Maybe that's the thing that sends us higher. But again, I'm heading into Monday very cautious. And that leads me to talk about the VIX. So when we go to quant data and we're talking about the VIX here, right? The 30 calls or strike calls for the VIX is still in play, right? They're still in play. Um, and we look at the expiration of the 18th, March 18th, and you still have pretty decent spikes, call spikes for March 18th, and you have 30. I don't think they came in Friday. I think they came in a different date. But yeah, you got like 26 strike calls for the VIX. I'm trying to, like, they're so bunched together. It's really hard to click on these. Yeah, but as you guys can see, March 18th, you got 26 calls coming in, right? So March 18th is this upcoming Monday. So this is why I'm leaning towards a drop before we pump, right? That's what I'm leaning towards. And I mean, institutions can lose, guys. They don't lose, again, they don't lose the way we lose. They can get squeezed out, right? You can get short squeezed, right? Or they can get short squeezed, right? So you do have a decent amount of calls coming in, but you do have some puts coming in as well. You got these, 22 strike puts. I think we made it below 22, so they probably took profit at that point. And then let's see what happened near close. Yeah, 22 strike is not something I'm really considering that just because we already got below 20, but then you got these. But look at the premiums. I mean, this looks like some kid just showed up at the market exchange and just put his allowance money on a trade and was hoping to go crazy on it. So, but regardless, yeah, as you guys can see, for Monday, these expired for Monday, and they were loaded up at around noon time. You're seeing 28 strike, and these premiums aren't anything significant here, but yeah, you see mostly 26 strike calls for the VIX. So Monday we might see another drop. Is it guaranteed? No, but the quantity is kind of insane. So this is why I'm kind of leaning towards a drop Monday before we pump. If anything, maybe FOMC saves the day. But again, institutions can't lose. This is why I don't want you guys to blindly follow this stuff, because I don't blindly follow. And if I do blindly follow, which is very, very rare, like extremely rare, then I'm going to let Discord members know that whatever trade I'm putting out is very risky. Okay, it's extremely risky, and chances are it's cheap. Okay, or I let them know, hey, you probably shouldn't go heavy on this play, but you're gonna do what you want, right? So that's what I'm looking at for the triple Qs. We're still below the 200 MA, right? If we do bounce higher, right, because we do have this, weekly reversal pattern here, I would say the highest we could potentially go, at least for now, is about 500, guys. That's what I'm looking at. Okay, downside, as long as, again, you stay below 480, even if you get above 480, I want to see a move above 484, 485 before we get really excited for 499. And then from there, I want to see what institutions are doing when it comes to the triple Qs, right? So that's ultimately all the things I'm looking at when it comes to upside. I want to see us break key levels, right? Once we start breaking key levels, then that's when I go to the options chain and I see if institutions are either with the upside move or are they still loading up puts, and that can lead into a trap, right? That's what I do. I don't look at institutions first and then get into a trade. Like, no. Okay, so I just want to make that clear, right? And I don't want you guys blindly following. So let's talk about Nvidia. So right now, Nvidia, we're on a weekly time frame. Nvidia is right below or close below this rising wedge pattern, which is a bearish pattern here. If Nvidia, this is a not bearish, bullish pattern right here. I believe it's a piercing line or a bullish. It starts with an M. I don't know every pattern by heart, but it's a bullish Maserati or something. I don't know. Regardless, yeah, this is a bullish pattern, but even then, I think Nvidia just has so limited upside, right? And why I say that is, again, this is why I tell you guys to zoom out. I mean, these guys right here. I mean, these guys right here, these cocaine bears, these psychos right here, guys. I mean, so much. You need so much to break through this. So much. Around 127, between 127, 133, we'll just say 135. You have to deal with so much to get above this area. And even then, I mean, like I tell you guys all the time, Nvidia just cannot get above 140 to save its life. So I think Nvidia, if Nvidia sees more upside, you're looking at 135 tops before rejecting. Again, you're just going to create another lower high. That's just my opinion. Can that change? Sure. But again, I just don't see a world where Nvidia breaks 140 just yet until maybe its next earnings, right? That's just me. Right. I don't think we're there yet. I mean, but you have so much to deal with towards the upside when it comes to Nvidia. Now, another scenario is you just simply reject from here, right? We've seen this happen for the past 2 Fridays where you create a bullish pattern or you close below a key level and then you just immediately reject, and that following Monday you rug pull the following Monday. So it's very much possible. At some point in time, Nvidia needs to come back down here, okay, where these bulls are at 92. It's avoiding it, right? It's really avoiding it. I don't think Nvidia is getting great enough news for it to be pumping this way. I think it's just pumping just to be pumping at this point. I think it's being treated as a safe haven in comparison to Apple because Apple is tanking. But yeah, again, Nvidia at some point in time has to come down here. All right, I'm saying that with very, very strong confidence, guys. I want to make that clear. Nvidia needs to come back down here at some point in time. When that happens, I imagine maybe April, since that's where institutions are loading up puts when it comes to the overall market, right? But at some point in time, yeah, I truly believe Nvidia needs to come back down here, and then from here, I think you're going to get like a really decent bounce because the bulls are very much present here and very much present here. So you guys let me know what you think about that in the comments below. But again, I think upside for Nvidia, I wouldn't say this is limited because 133 is a very significant move. But yeah, once you get here, I would just be careful because you can easily create a lower high here. All right, Apple. I missed out on talking about Apple for like the past 3 videos. But again, I've been giving you guys the keys to the city when it comes to this. I mean, if it comes to any other play, on this channel, Apple is the main thing you should have profit off of if you decided to follow and you got your own confirmation, of course. But I mean, Apple, I've been bearish on this thing since like before its earnings, right? Right about here. And even when it had earnings, I was just like, yeah, I still don't think it's going to continue. This move is going to continue or sustain itself. And boom, Apple tanks, right? So congratulations, you followed this play. But yeah, you had a nice head and shoulders pattern, shoulder here, head here, shoulder here, right? You've broken key levels. I mean, you destroyed 220, you destroyed 215. You know, it took a bit to get below 215, and I think Apple is going to see more downside. But I'm going to show you guys like a beautiful setup here, like a really beautiful setup. So this is, let's actually mark this out real quick. This may be a little bit off. No, that's definitely off. So right here, guys, you have resistance here, not resistance, support here at around 200, between 200 and 199. I think that's where Apple is trying to go. Okay, that's where I think Apple's trying to go. Now, institutions loaded up 205 puts on Apple for April 4th, and so not only you, I mean, you broke below key levels and you closed below key levels here. So Apple is definitely, in my opinion, trying to head towards 199, 200. So don't be surprised if that happens Monday, Tuesday, or something like that. But I think it's trying to head towards these guys right here. Let me mark it out for you guys. So right here and right here. This is where I think Apple is trying to go, right? I think that's a nasty buying opportunity. I would definitely be looking at calls right here. Even, I mean, even just ignore these guys for a second. You just see right here. There's so many bulls right here. Bulls right here. Bulls right here. I imagine these guys are gonna step in. Like they're gonna step in strong. I just don't see a world where they just gonna let Apple just fly towards the downside or continue to fly towards the downside without stepping in some way, shape, or form. And then from there, I think Apple can bounce back to about 220, 230s, right? Which would probably cause for a rally in the market, right? So yeah, this is another reason why I think we're going to see a pump towards at least the end of the week. It could happen at the beginning of the week, and I could just be wrong on the timing. You know, I'm not like Houdini or anything like that. But yeah, right here, I would definitely be looking at what once we get here, I'm definitely going to be looking at a setup, and then I'm going to be looking at what institutions are doing when it comes to this area right here, because I think this is a beautiful, beautiful opportunity for Apple, if not for a long-term investment. Now, I do think Apple is going to head towards the 180s. That's the lowest I'm looking at for Apple, and I think that's another good target to buy between 180. There's a gap all the way at 176, but yeah, I think Apple is an absolutely beautiful buying opportunity here at around 199, and then lowest I'm looking at is a 170. We'll say 175, 180. But yeah, that's what I'm looking at for Apple. I think it has a little bit more downside. I mean, towards close, you guys saw it. You broke below support here. You attempted to retest it. You had an inside bar. That could be a good sign towards upside, but regardless, I think Apple just needs a little bit more downside, and it's below its 200 MA, and I think it wants to head towards these guys right here. And once you head towards these guys right here, I won't be surprised Apple just comes out with some random good news and then just starts, going crazy towards the upside. Now, highest it could go is 240, very much possible, right? I don't know how that's going to play out. And the reason why I say that, let's zoom out a little bit, or zoom in, I guess. You're looking at a move towards these guys right here. There's a minor like gap in this area somewhere. Maybe it's on the 4 hour. It's somewhere. It's around two. Yeah, here we go. Okay, this is what I was looking for. There's a small gap. Let's just get rid of this. We get the idea, right? There's a small gap here at around 238, 240, right? Right here. So that's the highest I'm looking at. But just like what I said with Nvidia, you just have so much to deal with once you get up here, right? You have a lot to deal with once you get up here. So if the market decides to tank all over again, which I think is going to happen in the future or the near future, right? If the market does crash and burn all over again, um, I was I would look for a beautiful put opportunity or short opportunity here at around 240 on Apple, and then we just do it all over again. And at that point, I think we're just heading towards 180. So yeah, Apple looks absolutely beautiful for a potential setup towards the upside. And that's what I'm looking at for Apple, guys. All right, so let's talk about Tesla. Tesla bounced off its 200 weekly MA, right? So this is a good sign. This is an absolutely good sign. The only issue here is that upside can be very limited. I guess a move towards 270 is all about perspective when it comes to limited, but yeah, you're looking at these guys right here. Tesla needs to get above 270, 272, give or take, right? It needs to get above this. So even if you do see a bounce towards the upside, it could be very limited. Now, if you get above these guys, then yeah, the the floodgates are open. Like if you really get above these guys, you can see a move all the way towards 320s, when it comes to Tesla, right? So what I want to see when it comes to Tesla is just a simple break, retest, upside, right? Keep in mind this is a weekly time frame. It obviously the smaller time frames will make a break and retest look a lot better. But regardless, that's what I'm looking at for Tesla. You got this nice dragonfly pattern. This is a reversal pattern here, a very strong reversal pattern, so I will be on the lookout for that. I mean, right on a 200 weekly MA is crazy, so I might actually look at calls myself when it comes to Tesla, see what institutions are doing when it comes to it. But yeah, that's pretty much all I have for Tesla. I mean, as long as if it stays here, then you're definitely going to move towards the upside. If it gets above 234, then it gets pretty bad and you can start looking at like 220s and things like that. But they failed to keep it below 234. You're looking at potential upside for Tesla, which is probably a good sign for the overall market. VIX. So this is my issue with the VIX right now. I'm not a fan of this. So the VIX is like telling a different story in comparison to the rest of the market right now. The VIX is at support at around 21, 20, 21 and 20 and 20. Okay. I don't like this at all. So this is kind of bothering me, right? Because the SPY looks like it wants to reverse. The triple Qs look like it wants to reverse, but the VIX is just sitting on like double support right now. It can easily just YOLO you, like Uno reverse. And we still, again, I'm still gonna stand by what I've been saying for a long time. The VIX needs to clear this area out at around between 35 and 40, right? It needs to clear this area out. When that happens, I don't know. But I mean, even if you go further out, you're so liquid towards 70s on the VIX. I don't know if that's going to be happening, but there's been 50 strike calls trickling in when it comes to institutions, but we'll talk about that in the future when I feel like that's a possibility. But for now, I'm not a fan of where the VIX are, and this is why I'm like urging caution in my last video. I still urge caution now. I would just wait to see how Monday plays out, if anything, and then go from there. But I'm not a fan of where we are when it comes to the VIX. I mean, you zoom in and you see it clear as day. Like we clearly bounced off this, right? You bounced here, right? You mounted here, and you can easily break through this level. But my issue is that when you look at the weekly time frame here, right? This is the first time ever that we've broken this trend and stayed above this trend, guys. Like this trend line right here, every time we broke above this trend in the past, we will wick right back below it. I mean, even when we went all the way to like the 60s on the VIX, right? We wicked all the way back below this trend, and we did it, and we attempted again. We wicked back below it every time. Okay, every time. But this time on the weekly time frame, we broke above this trend line, and we're staying here, right? We're actually staying here. We haven't wicked back down. We haven't stayed, below it or anything. We haven't rejected it. We're actually just mounting it at this point. So, kind of I would urge caution here. Okay, this is just me. I would very much urge caution. I already showed you guys that institutions are in 26 calls for, I believe, what was that, Monday, I think. So yeah, be this is why I'm cautious, right? So everything else looks good when it comes to a potential reversal, but the VIX is kind of bugging me here, right? And anytime I talk about the VIX, a lot of you, some of you still doubt to this day, which is crazy to me because every VIX video hit. I even told you guys institutions were loading up 30 strike calls on the VIX, and the VIX went as high as 29.5. So, and the market still tanked. So, one day you guys will catch on. But regardless, yeah, I'm not a fan of this. Hopefully, I got the point across. I'm still not a fan of this. IWM. Reversal pattern on IWM once again, but I still think IWM is going to head towards 190. It's just a matter of when, right? And I mean, you just have so much to get through when it comes to the Russell. Even here, I mean, so highest you can be looking at is maybe 210 all over again. But again, there's so much to get through when it comes to this thing, you know, so much to get through. And we can look at what institutions are doing here. So we look at the IWM. I actually don't know what they done Friday. Yeah. So even even towards close, the amount of hate the Russell gets is crazy. These guys hate the IWM. I mean, they all they do is trade puts on this thing. We talked about. I mean, look at 190. What in the world? March 14th. This was loaded up 10 minutes after the bell, right at close. Right. IWM April 17th. 193 puts at 202.65, and the premium is 10.96 million, and the quantity is like damn near 40,000. That's insane. Like, I mean, and it keeps going. Like they really hate this thing. Like, yeah, and I don't blame them. I don't blame them. Tom Lee, you guys listen to Tom Lee, who listen to Tom Lee. I don't know how you guys listen to him. I really don't. This guy said IWM is going to make new highs the first quarter. What incentive does IWM small caps have to make new highs? Like they have no incentive to do that. So I thought that was insane that he even said that. But you guys love him. A lot of you love him. I think he's just he's just scamming everybody at this point. He shows up, says, "Yep, I'm still bullish," and then he walks away and gets paid. That's how I see it. So, yeah, IWM still pretty bearish on it. I think it's going to see more downside. If you get a retest towards the upside, look at 210. Again, you just have so much to get through here. So I'm not really a fan of IWM. SMH. Semiconductor ETFs, and then I'll get you guys up out of here. Like I said, it's going to be a long video, so if you stuck through it, I really appreciate you. I really don't make long videos, but I got a new computer, so I'm going to enjoy this while it's here. But yeah, SMH weekly time frame, you're below resistance still. You're below this trend line still. 235 again is what I want to see SMH get above, and then we can start talking about like some super ultra rally, possibly towards all time highs. But right now you're below 229, which is our key level here. Right here where these guys are, yeah, so you're still below these guys here. So you still got a lot to get through here. I still think SMH is going to head towards the 204, 200 range, right where these guys are, before they step in. So I do think at some point you're going to retest this trend line. Now, I will say that the fact that you didn't retest this trend line, you got a bullish wick, is a decent sign, a good sign here. But still, I think if anything, this could happen, right? Before you see more upside. That's just my thoughts on it. SOXX, same thing. You got somewhat of a reversal pattern. You're somewhat. Let's actually go to the daily time frame to get a better idea. You somewhat close. You somewhat close above this trend, which is a good sign. But ultimately, as long as SOSX stays below 210, I'm not buying any real upside right now. Um, and of course, I'm gonna trade the upside. If we get upside, don't get me wrong, guys. Like I don't mind trading the upside at all. Right? I'm going to trade it. Okay. We're gonna make money regardless in the Discord. Right? But ultimately, I'm going to be looking for bearish setups because I think whatever upside we do get is going to be short lived, maybe for the last 2 weeks of March, and then April, we just start doing it all over again, like towards the downside. But again, you're still making lower highs on SOXX, right? So if anything, we'll probably make another lower high. We hit maybe 210, and then we just do it all over again towards the downside. So yeah, ultimately that's what I'm looking at, guys. You guys let me know what you think in the comments below. This was a pretty drawn out video. Bitcoin, just real quick, right now you're just smacking this wall over and over at 85k. You get above 85k, 84k is a key level, but your psych level is 85k. Then you're looking at a move towards 89k, or you open the floodgates towards 89k and whatnot. These bulls stepped in right here at around 78k. They're still trying to hold Bitcoin up. Um, so yeah, if anything, you could just simply see a move like this if you break above 85k, and then I think Bitcoin's going to tank all over again and head towards 73k. That's still a target that I'm looking at. There is a fair value gap at 73k that I think Bitcoin needs to hit. Oh, it's a little bit above the 200 MA. Is kind of struggling right now, but if it can manage to stay above this, then yeah, I think 89k is definitely on the table. So that's all I have for this video. You guys let me know what you think in the comments below. Is the quality good? Is the sound good? Discord, a few Discord members let me know that it's a lot better than my other videos. So I do appreciate that. Um, I I had my old computer for so long, guys, that it was just I was just gonna run into it dies, and then it finally died. It finally gave up on life, um, you know. And then I was just like, all right, time to get a new computer, right? So um, that's pretty much why my quality was bad in my old videos. But apparently it wasn't bad enough because you guys, still supported the video, still, commented, interacted, and things like that. But hopefully we get a lot better content from here on out. I do appreciate all the support. I probably won't make a video tomorrow unless I see like some dramatic change, or I see something new. Maybe Bitcoin like absolutely plummets to the ends of the earth. So we'll see. But Discord link will be in the description below. Do not miss out on this week. FOMC meeting is next week. It's going to be a crazy volatile week, I imagine. Until the next video, traders, have a good one.